Hey everybody, it's Robert Klein here from financialstuff.ca. Today I'm going to talk about the re-advanceable mortgage and how it works. So the outline is going to be how did I find out about the re-advanceable mortgage and what is a re-advanceable mortgage. So in 2008 I started to invest in some places in Winnipeg, and when I started with 20% down. I figured out 10% down, the next one 5% down, 2% down. Then I got into something called 2% down plus 10% improvements. So what that meant was if I bought a property for $100,000, you put 2% down or $2,000, and the bank would give me 10% of the property or $10,000 to fix it up. Then I figured out 2% down plus 35% improvements. And everything was going good until April 19th, 2010 came around, and when that happened, CMHC wiped out all the rental programs, which pretty much destroyed what I was doing. So I then was forced to look at conventional financing instead of CMHC financing. And when I did that, I sat down with First Line, was one of the banks, and First Line, owned by CIBC, talked about this program called the Matrix. And how it works, they said, well, you pay your interest and your principal like any other normal mortgage, but when you pay down your principal, we'll give you a line of credit and give you access to that principal portion that you paid down. So in her point of view was that line of credit you have access to, you can use it to fix up the property or pay off debts or something like that. But for me, I immediately thought, wait a minute, are you telling me I can pay interest and principal, and the next day you're going to give me access to a line of credit that I can pull out that principal portion, so in return I'm left with a net interest only payment at prime minus 0.5 or 0.75? And that was pretty much what that program was. I pretty much figured out how to get a prime minus interest only loan by looking at a payment structure. Traditionally, up to this point, the only interest-only loans that I knew of was the line of credit, and today they're prime plus half or prime plus 1. So let's go through an example. So what is a re-advanceable mortgage? Here's the example: $300,000 mortgage, 2.7%, $1,216 a month. Now, this is October 2011. The 2.7%, the rates have increased in the last 30 days. A month ago, that would have been prime minus 3/4 or 2.25. So with this, you're looking at $1,216 a month. So in a traditional mortgage, you're paying the interest, you're paying the principal. So in this scenario, you're looking at $675 interest, $541 principal. So whenever I pay down the principal portion, a line of credit is going to appear and going to give me access to that $541. So how would this work? On September 1st, I'd pay my $1,216 or my interest and principal payment, these two parts. And on September 2nd, I have access to $541. I take it out, so minus the $541 here. And because this is a line of credit, I have to pay interest on the line of credit. So a line of credit might be at 4%, so $541 times 4%, that's about $21 or $22. Divide that by 12, and now I'm looking at an interest payment of $1.80 for that amount borrowed. But what happens is my net payment becomes $676.8 for a $300,000 mortgage. October 1st. Again, what happens? I pay the usual $1,216. The line of credit increases by $541. I now have access to the $541, so I take it out. I now have to pay interest on $1,082. Well, $1,082 times 4%, it's like $40. Divide that by 12. We're looking at about $3.60 in interest costs on the line of credit. My net payment, it becomes $678.60 in this scenario. So that's pretty much how the re-advanceable mortgage works. You have the option of taking out this money. You do not have to. It's not required. But if you wanted to maximize cash flow or maximize cash flow or minimize your payment, this is definitely the way to do it. In terms of qualification, it's pretty much the same as getting a variable mortgage. You do need 20% equity or 20% down to acquire it. The types of properties that banks will finance like this, a lot of banks will finance your principal residence like this. First Line will do one other rental. Scotia, in theory, they would do 15 or 20 of these properties like this in a re-advanceable. There's a net worth requirement, but that's an option. So lots of flexibility. This is how it's structured, and this is how a re-advanceable works.